What's up? What's up? What's going on, everyone? All right, let's take a look at our higher time frame here. So, what are we looking at? We have buy side, previous week's high. Um, we've taken previous day low liquidity. We closed above this BISI. So, what I'm looking for is as long as we stay above this 1 hour BISI, I'm going to look for some longs. And these are my buy side targets. Now, we want to look at our hourly highs, right? So this is an hourly high. And right now I'm expecting a purge for me to look for a market maker buy model. Okay. So hopefully by now you understand what a market maker model looks like. If not, I have some videos in uh, somewhere in my YouTube channel. And again, anything that I do here is not financial advice. I'm just showing you stuff that I've learned throughout my own journey. All right. So you have to come in with a plan. Okay. I've told you my plan. Um, what do I do next, right? I identified the order flow on a higher time frame. I target my where my liquidity is at. I use time cycles. Time cycles. Why do I use time cycles, right? Because price moves using time. Okay. Um, Whenever you use these time cycles, it allows me to identify market maker models on the lower time frame because time is fractal. You can, if you understand how a market maker model works, you should be able to identify them on the lower time frame as well. And I like using 90-minute cycles. I like using um, session cycles. So the way you identify these cycles is by using PXH and PXL. And once you identify what to look for, you need to use SMT. And why do I use SMTs? Because SMT, whenever you spot these, it allows you to catch pretty much SMT throws these signals at you. It should throw red flags at you. Um, and normally when you see SMT, um, it's going to tell you when the market's about to either reverse and expand. So um, right now, um, what I'm doing is I am waiting for a type of purge, and then if it happens before I look for a time of interest. The time of interest is for me for my entry, for the window for my execution. So I always wait for a time of interest, and a lot of people ask me, well, what if the move happens before? Well, the move can happen before outside of my time of interest, and you can execute it. There's nothing wrong with executing outside of the time of interest. I like waiting during these windows because my probabilities are higher. Um, so um, that's just what helps me identify when the market either switches into a buy program or it's going to switch into a sell program. So right now it's 9:46. So I wouldn't take any entries from here. So it looks like you see all these blue lines. These are all of our buy side liquidity. You see how these are just equal highs. It just leaves them behind. So I'm expecting some type of retracement lower, a purge. These these cycles, you use them as POIs, okay? These lows, it's just sell side liquidity, okay? Whenever they get purged, you use that as POIs. Then you look for your SMT, then you look for your CSD. CSD is change in state of delivery. If you don't know what CSD is, it's pretty much a market structure shift, okay? Other people also like calling them breaker structures. Everybody starts naming everything different, okay? I just like to keep it simple. I don't like to keep mixing different vocabulary in there and stuff. So a CSD, what CSD is, it allows you to see these market structure shifts using candles. Market structure shifts, normally people identify them um, by looking at like swing highs and little fractal highs and stuff. So I just like using candles. It allows me to identify these market structure shifts earlier. All right, so as you can see, we're retracing. So think of this leg as the manipulation, right? Because our bias is telling us that we need to go higher. Or that's my bias, right? My bias is telling me that I need to go higher. That's my plan. So I'm seeing this as a form of manipulation. People are going to be like, "Oh man, I need to short the market right now. This thing's dumping," and um, obviously that they'll probably get stopped out. So I'll just give it a second um, and see what happens here. So what I'm doing is I'm waiting to see if this is an inverse. This is a fair value gap, right? If we close above it, we disrespect it. That's telling me that the order flow is changing. So always look at these like smaller PD arrays, right? Once you see that if they start getting disrespected, because obviously, right? So this is a SIBI, it's a fair value gap, and pretty much if you're bearish right now, if you want the momentum to keep going, this fair value gap needs to be respected and it needs to keep dumping, right? So signs to gauge your order flow and keep this in mind because you can do this on your higher time frame. When you see something like this and it gets disrespected and it doesn't stay below this fair value gap, then those are throwing signs at you that the order flow possibly is changing. Okay. And the thing is that when you use time, you're gonna start understanding when the market is either gonna flip into a buy program or when it's gonna go into a sell program. Okay. Because this is not selling pressure. Diago is already programmed to either flip bullish or bearish. And we have we have SMTs here, so this is why I'm gonna look for a long. I'm gonna go ahead and enter there. So I want to keep this here. I entered late, it's up here, but whenever it fully closed, that's where I wanted to enter. I entered like a few milliseconds too late. But so so you can understand this low here was taken already by it was already taken by Nasdaq. It has not done that for ES, and it has not done that for the Dow Jones. We're in our time of interest. Then we have this SMT down here. We have these SMTs here, and then we have these SMTs over here. So we have two types of SMTs. Okay, I'm gonna label inverse fair value gap. If we retrace a little bit more, I'll add another contract just because the uh, the entry kind of sucked. This is how you use inverse fair value gaps. So now, because the algo, we can confirm that it is on the buy program, right? Why can we confirm that it's on a buy program? Because you see the next fair value gap here, it disrespected that one, right? Let me start moving my stop loss. That way, you start minimizing risk, okay? And you see this other fair value gap got disrespected. So this is an inverse fair value gap. This is another one. We're going to come retrace. Now, if we're still in a buy program, it's okay to retrace to it, but we're going to use it as support. And we'll put my little arrow here. From here, we're going to use it for buy side, to take buy side, okay? And then I'm pulling this to the side because yesterday I was using it to gauge our range. So this is another 1 hour, um, an hour SIBI. So right now, I'm needing all of this to get respected. So 10 o'clock is coming up. So normally what 10 o'clock does, it will expand and purge liquidity, right? But because we have SMTs here at these lows, let me put it at this low here just in case. Um, these lows should stay respected. I'm going to add an entry there. And then I'm going to go ahead and take two contracts off here at this high. So the, the 10 o'clock candle opened low. And then once it comes to takes this high, I will aggressively move my stop loss because um, usually when a 10 o'clock candle purges a liquidity, it will normally either retrace again or it will expand. So just because I don't want it to stop me out after it purges this buy side, I will go to break even. And then if you take a look here, we got more SMTs. All right, so because these candles here, you see how they're closing more bullish, I'm going to start minimizing my risk. I'm going to move it below this low because this is an SMT low. So it's very safe to place, if the opposite side liquidity hasn't been taken, it's very safe to put your stop loss where the SMT low is at, this low or this low. You can place it there because now we've identified that the algo is in a buy program indeed. It should target the opposite side liquidity. And we have all of these PD arrays that need to be respected before it targets its liquidity. So the algo should not come back and stop us out. If it's truly in a buy program, it needs to keep going. Now, once it takes this buy side, because you see how it leaves these highs intact, it's going to come back and purge them, okay? So look at this wick here. You see this wick? You can use wicks support and resistance as well. Look at how we retrace. You see how the wick? Look at how we retrace into it to rebalance, and then we're gonna come back up. Or it come there's a fair value gap there as well. It can come touch there and go up. And let me just clarify. I'm not using when I'm at support. I'm not doing support and resistance. Okay, these are all of these are ICT concepts. We need to use this for value gap. And I don't expect any type of reversal from here until we purge more buy side, or if I see any other type of SMTs with these highs here. And because um, ES, the Dow Jones, and NQ are still in sync, I still expect for us to keep going higher. I'm actually going to take one. I'm going to take one contract off here, and the reason why is because just through experience, you'll learn whenever we come and do a stop hunt like that. Whenever there's little stop hunts like that, sometimes you catch little reversals, and you'll learn to spot those. So once we purge this year, um, we want to fully close above this previous 90-minute cycle. Okay, we want to use these order blocks from the previous 90-minute cycle. We would want to use those as support to keep going towards the upside. Because what we don't want to see is we purge and then it's a purge and revert model like this, because this is another 90-minute cycle, right? We don't want this 90-minute cycle to purge the previous 90-minute cycle and then turn back, go back lower. And I'll show you here in a second. Hopefully that makes sense. So you see how this high, we want to use it to keep going higher. We want is it can retrace into this high and keep going higher. All right, so all right, we want to close bullish. We don't want it to wick, okay? These are order blocks. All of these together, these are all order blocks, okay? We want to use the left side as support now. So this high right here, see this high? We don't want it to purge and then revert, right? Because this is a 90-minute cycle. It purges a previous 90-minute cycle. We want it to keep going higher. So it can come, retrace, use this high as support, and it keep continuing towards the upside. So I got two. I'm gonna label previous day high. Previous day high buy side. This is actually, I'm gonna take another partial there. This is Asia high buy side. Just go ahead and take that. I want to stay above these highs. So let's take a look to see. We entered a little bit late there. We got our stop loss somewhere down here. So far, 2.6 trade. We want to take previous day high. And hopefully y'all um, take a lot of this. It's a lot of free sauce, and I make these videos just because I like putting everything together. I like showing you the higher time frame because I do see I see a lot of traders that that don't they don't they don't show you the ins and outs. So they kind of just show you uh, how they enter their trades and stuff. But there's a lot of layers to this cake, okay? And all of these things have to line up in order to execute. You just don't see, oh, it's an order block and then you enter. Oh, it's the fair value gap and I'm going to enter. Um, you you have to understand. So the foundation is understanding market maker models. Okay, once you understand how market maker models work, then you can start using these time cycles because they're very important. Once you understand these time cycles, which is by using PXH and PXL, then you can see these fractal market maker models. You'll start understanding when um, you'll go into a buy program or when you'll go into a sell program, and it makes life like it makes your trading really really easy. All of this, if you're wondering, all of this I've learned um, from ICT. I learned from Susie. I've learned from Jamie, and then everybody has a little bit of everything, okay? And then you start putting it in the pot, you mix it all up, and you start building your own model, okay? I'm teaching you the way that makes life easy for me, okay? So again, none of this is financial advice. I'm just showing you how it all makes sense to me. So SMT, order flow on the higher time frame, everything has to add up for me to enter these trades. You have to come in here, look at the higher time frame, you come up with a plan. Okay, this is how it's looking to me. Okay, this is making sense. Okay, now I know where the liquidity, I know what the highs are, because if you do not know what high or what low the market's going to target today, if you do not understand that, do not enter any trades because you're not sure, right? And then you're just gambling. Um, yeah, the market doesn't care about the order blocks. It doesn't care about the breakers. The market's going to go target a high or it's going to go target a low, and we have to identify what that high and what that low is. I'm going to stop. Ideally, we want to stay above this high. And there's that. So hope you got some value out of this video. If you have any questions, put them in the chat, and don't forget to subscribe and like the video.